The FTSE 100 has been outpacing its peers in Europe and the US, but what's been driving the moves? A reminder that the following information is not to be considered investment advice or investment research. Capital.com will not be liable for any losses from the use of the information provided. Hello, I am Daniela, and in today's video, we are going to be looking at the UK index FTSE 100 because, as I said, it has been outpacing its peers both in Europe and also in the US. In today's video, we're going to be looking at a few reasons why and also jump on the chart to see what could be next. But before we get into this video, please like, comment, subscribe, and turn on your notifications. So as I was saying, the FTSE 100 has been strong recently, driving some good momentum to push higher. It's actually broken away from a key technical level, which we'll be looking at in the charts. But it had a pretty successful rally to start October. Found a little bit of resistance at present, which is normal with everything that's been going on. But so far, so good in holding the gains, at least better than, as I said, its peers in Europe and the US. Now, the FTSE 100 is a commodity-heavy index. It's very heavily geared towards oil companies and also miners. And of course, with the escalation of tensions and the conflict that we've seen in the Middle East between Hamas and Israel, we've seen a strong push towards precious metals, especially gold, as a safe haven asset, but also oil on the back of concerns that we may see even further tightening in supply if the conflict escalates even further to the wider region of the Middle East. Now, BP and Shell have been big drivers of moves. They have been the biggest drivers over the past month for the FTSE 100. Not only has oil been strong in the past 10 days since the conflict started, it's been strong for pretty much a month now, as we had seen, of course, those talks from Russia and Saudi Arabia to cut production and to keep those cuts until the end of the year. So we had started to see concerns about supply creeping up and therefore driving oil prices higher, which had been undervalued for a while. Now, the energy sector, basic materials and real estate have been the three key sectors within the FTSE 100 driving those gains. As I said, Shell and BP, a big part of that, but also banking stocks have been performing pretty well in the UK. And we know that banking is also a heavy sector within the UK 100. So we've seen some strong momentum, as I said, mostly on the back of those fears of greater conflict in the Middle East, driving those oil giants higher, taking the FTSE with it. Now, the one thing to note is that these higher oil and gas prices actually do put upward pressure on inflation. As we know, the UK dealing with a dire situation when it comes to inflationary pressures, not managing to get it under control, much worse than other places like the Eurozone and also the US. So, of course, that can weigh on sentiment in UK assets. And as I said, with oil and gas prices picking up once again, we could see that playing its part as the cost of living crisis and the cost in households increases, and therefore there's less disposable income. Now, in terms of UK jobs and CPI, we have this data coming out this week. So tomorrow, on Tuesday, we have the UK jobs data, and on Wednesday, the CPI for September. I assume there's going to be a lot of focus on both of these data points exactly for the reason that I said. Given that energy prices are on the rise once again, there is concern that we may see upward pressure on inflation. And of course, how is the Bank of England going to deal with that when markets are already perceiving like the Bank of England is lagging and is not keeping up to its mandate to control inflation? The Bank of England meeting scheduled for November 2nd. Markets now pricing in a 70% chance of no hike. As I said, a lot of focus on the data this week. It's likely that we see some shifts in the market on the back of that. And of course, these expectations may change. Other than that, fundamentally, not really much has changed. The focus this week, of course, conflict in the Middle East and this UK data. Okay, so here we are on the FTSE 100 chart, Capital.com via TradingView. As you can see here, the strong momentum at the start of October, actually undoing a lot of the losses that we saw towards the latter part of September and breaking above a resistance trend line that had been crucial back here in July when we saw that rally midsummer. We saw a lot of that momentum fizzle out near to that RSI closing on the 70 mark. Actually saw this trend line coming into play. We managed to break above it back here on the 14th of September. You can see that strong FTSE 100 daily candlestick actually breaking above the RSI, the 70 line there, for the first time since February. Now, so far, the RSI is still hovering close to the 50 line, meaning that there is still further momentum to go until it's deemed to be overbought. The RSI has fizzled out in recent days as we have reached a short-term top, as you can see. A lot of that resistance actually coming along this yellow line, which is the 200-day simple moving average at 7,647, as you can see. That momentum really fizzling out there on Thursday when we saw that stronger CPI in the US actually bringing the US dollar higher, seeing some risk aversion moving towards US yields and also the dollar. So affecting some of the more risk on assets, even if it's not directly related to the data, we did see that shift in markets. Now, since then, we've had a bit of a bearish bias, as you can see, but I think that the path of least resistance for now remains on the upside. I think the moves that we saw prior to that managed to cement those gains. So far, the 20-day simple moving average, which is a short-term measure, has actually offered a little bit of support, as you can see, just around that 7,518 mark. Today's candlestick bouncing off that throughout the morning, as you can see, those lows coming in contact there. The candlestick for today's session so far showing a very narrow body, pretty much unchanged at the open right now, despite seeing a minor pullback. So there is interest from buyers to come in and bring the FTSE 100 higher. As I said, the key area of resistance is going to be that 200-day SMA, looking to break above that 7,645 line in the short term. If we do break above there, we'll have to look at prior resistance around 7,685 and also the highs that we saw back here around 7,745. So that is the likely area of increased resistance for buyers, likely to see a few daily candlesticks showing some reversals along those lines if we do get there. But as I said, first we need to clear the current resistance at the 200-day SMA. Looking to the downside, as I said, that 20-day simple moving average offering some resistance, some support right now. For after that, we've got the descending trend line, which could act as support. It did back here for a minor bit as we came back from those highs in September. We then saw that pullback deepen, following through, especially with that RSI dropping below 50. If that does happen, again, looking for support along those moving averages, even back all the way to 7,400. But as I said, for now, the short term looks like we could continue to see some further gains if we do see buyers coming in and breaking above that key 200-day SMA resistance. That is it for today's analysis on the FTSE. Thank you so much for watching, and don't forget to subscribe to our channel.